Hello, fellow traders. Tis I, the Rumpled One. It is Monday, April the 9th, the year 2018. Let's talk trading. Filtering. As some of you may know, if you've watched some of my non-trading videos, I'm a prepper. I'm somebody who prepares for disaster, considering I live on the earthquake zone here on the West Coast, up in the southwestern part of Oregon. Yeah, any day, anytime, we could have the big Cascadia event followed by the tsunami. So I prepare, and one of the things about being prepared is the ability to have potable or slash, you know, drinkable slash healthy water. So you can drink, because without water, you can go about, 3 weeks, maybe, if you're lucky. 3 days, maybe. Now, it's not 3 weeks, it's about 3 days, and then your body will start to break down if you don't have any water. I mean, in Arizona, when I used to live in Tucson, it's more like a day. 3 weeks is food. But the point is that you need to be able to turn contaminated water into drinkable water. And to do that, you don't add to water, because water in its purest state is H2O, hydrogen and oxygen. What you want to do is you want to remove the contaminants or the impurities that's in your contaminated water, and you do that by filtering. Now, why did I go through all that? It's because many people ask me about filtering to get better at trading. You want to filter, you want to get the right hour of the day, the right day of the week, the right, week of the month, the right month of the year. You want that, you want to filter out all those other potentially losing trades so you only get the winners. Well, in trading, it doesn't quite work that way. What you're most likely to do when you filter, you probably filter out the trades, many trades that give your method or system its edge. So you can overfilter. So you can't overfilter water, but when it comes to trading, you can definitely overfilter. You'll be left with next to nothing. And you don't want to do that. Not really, no. But just like when you filter water, you don't really want to add a bunch of stuff on the screen, a bunch of oscillators and averages and trend lines and support, resistance, supply, demand. Just, one of those charts on drugs where you can't even see the price anymore. I mean, it's like you just have to wonder what people are thinking. Well, in a way, you don't have to wonder. They're trying to, they're thinking they're going to improve their odds. They're going to, improve their positive expectancy. But it just doesn't really work that way in trading. So just remember that. So, to all those people who ask me about filtering, no, you don't just trade it as you see it, okay? You don't really need to add a bunch of stuff. And because the other thing about trading is, I like to run my frequency distributions. But you see, those are tools to help you find the best pair for the method. You see, many people are looking for the best method to trade across pairs. And each method has its pluses and minuses. But if the method's good, then you want to find the pairs that work the best with it. Just like when I traded stocks, I filtered out the stocks to match the stocks. Which stocks work best with the buy zone? Because when I was trading stocks, that was my go-to, the buy zone. It's like you don't need any other method, in my opinion, when you trade stocks, because every day, price is going to go up and down from the open. Now, the same is true with Forex. I mean, technically, really don't need any other method. It's just there's a few other methods in Forex, such as the wick zone, that just proves they are profitable too. So that being said, let's move on to the next screen, which you know by now is money and risk management. And so once again, see, if you have good money management, good risk management, you have the right position size, and you have the right stop loss, the right position size for the stop loss, then you're going to have, you're going to manage that risk, and you really let your stop loss filter out those really bad trades. So let's look at the screen here, and we can see that yesterday, I believe the euro, when we looked at it, this was still, the gap was still open, but you can see here that the gap has definitely filled. We had the close right here, the open here, and it filled the gap to the up, and it's continuing to go to the upside. But we've got the euro pound. We can see here there's still a gap right there. So maybe it fills it, maybe it doesn't. As you can see, it popped below the previous week's open, but now is returning the other way. So you might want to trade towards that gap, towards right there. Fill that gap. Let's see. I think we're looking at dollar Canadian to start off with. So kind of keep the charts the same here, even though I think this month I might switch up every week. We'll see. Just see what I feel like. Or if you guys have a particular pair you want me to display, let me know. I can do that for you. And you can see here some of the pound pairs have some really nice range. And you can see here high open. There's some really nice runs there. But look at the daily here. Looking at this once again, it broke above. There were pips to be had, about 23 pips profit potential there. Hairy hindsight, but we know we can always take that trade. And the buy zone, let's look at a somebody was asking, about the future pivot point right here. In other words, if the day were to end right now, this would be tomorrow's pivot point. Just like here was today's pivot point right here. And once again, you can see we're right back around that pivot. And now we've got rat zone to trade. You see it put in a low, then it put in a high, came out, and there was a nice red rat zone trade to be had. Now, green rats look like they want to start eating some cheese right here. And once again, showing that pivot. But I guess maybe I'll switch over to the hour. You can see it better here. There's the pivot and the central pivot zone. We've got yesterday's mid, and then the same distance on the other side creates what's called the central pivot zone. And as you can see here, price came in it, left it, came in it, left it, in it, and left it. Okay? See, it left it slightly to the bottom, tested again, turned around, and went the other way. And that is how you trade that central pivot zone, just like a holo zone or a wick zone or buy zone. Actually, not like a holo zone, because holo zone only goes out one direction. So think of it as like another buy zone type trade or a wick zone type trade. Price doesn't like staying in this area. Price action, once again, this boring old price action. and somebody was asking me about the three balls, how to trade it. So three ball, two ball, one ball, the three level ZZ semaphore indicator right here that I've modified extensively. But actually on this chart, the only modification that's really showing here is which way the bias is. And so it told you at the beginning of the hour the bias was long, and right here at 27.70 you enter the trade and you're up about 3 pips right now. Harry hindsight, right? No. So once again here you've got the one ball, and even without the balls you've got green at the line, H1 candle, you go long, green at the line if you woke up here, green at the line, okay, and green at the line once again, it turned around, red at the line, red at the line, okay, green at the line, red at the line. So right here there was some let's say indecision, which way to trade, which way to trade, which way to trade. Well, right here it's telling you trade this way. So once again, sometimes you make a little, sometimes you make a lot. You know, it's kind of like Mounds and Almond Joy, or Almond Joy and Mounds. Sometimes you feel like a nut, sometimes you don't. Yeah, I know I'm dating myself with that reference, but that's okay. Once again, H1 at the line using the previous session's high, close, mid, open, and low. And there you have it. We've already discussed pivot. That's why it's not on this chart, even though you could throw the pivot on this chart and have another horizontal line to trade. And we talked about the wick zone. Price doesn't like to stay in the wick zone, and you can see here price has left the wick zone a couple of times. But the bigger the wick zone, the higher the chance the price is going to stay in it, though. Just makes sense. Price moves. And the holo zone, the lowest open was here, beginning of the session. You put in the highest open, and it left and never returned. So there you have it. Put in a low, never returned. Put in a high, never returned. It's getting close, but hasn't quite hit the zone yet. And as you can see here, just on the tick chart price action, you can see here that the right here, the ask went below the peak of the bid, and we've been going down ever since. And you can see here the bid's getting ready to go above the valley of the ask. And if that happens, then price should start going the other way. That's just how it works. It's that simple. So, fellow traders, that's it. Remember, filtering. You know, just be careful, be careful, be careful. Don't over filter. Don't waste your time looking for something that's really not there. Even other people's systems. You try and filter out the trade. You're worried about what parameters to put in the moving average or MACD or stochastics. You're just curve fitting. You're just wasting time. So don't do that. Because remember, it's not what you trade, it's how you trade it. So join me in draining the banks.